Welcome everybody. Thanks to everyone who's joining us today. Just going to give everyone a few minutes to sign in. Great to see lots of people joining us today, so thank you very much for taking the time. Hopefully you'll be able to see our lovely panelists, as well as a short presentation, which is just really a guideline for us today for some of the questions that we're going to go through. I'll just give everyone one more minute and then we will kick things off. Great stuff. All right. Well, thank you everyone for joining us today. I'm Susie Wyeth. I'm a director at Babel PR and the Fintech portfolio lead. Despite the clamour to invest in the fintech market and the vast number of emerging organisations in the sector, it has attracted its fair share of negative press in recent years. The former chief executive of WorldPay is reported to be leading an independent review into Britain's £7 billion fintech sector. The review aims to evaluate the needs of Britain's fintech so the state can ensure the sector's global reputation is maintained and advanced. Indeed, on Friday, Dealroom highlighted that the second quarter of the year saw fintechs rake in €1.7 billion, just shy of that was earned in the first quarter. So we know the industry is still attracting a lot of investment. I'm joined today by 4 industry experts who are going to give us their insights into the state of the fintech industry and what, if anything, can be done to win back lost reputation. I'm going to introduce you to our panel. Joining me today, we've got Connor Coughlin, who's CMO of Fenergo. We have Eric Johansson, editor of RegTech Analyst, Katerina Ponsiki, Group Marketing Director for Credit Info, and Ruby Hinchliffe, reporter at Fintech Futures. To kick things off, I'm going to ask you a question. It is going to be interactive today. So I'm going to ask you a question. Hopefully you all have question up on your screen, and it's going to be really awkward if the answer is no. So I'll give you a few seconds to answer that. Wonderful. I'm going to cut it off in 5, 4, 3, 2, 1. Lovely. So share the results. Results say that yes, fintech has a trust issue, 94% agree, and which is exactly why we're here today. So thank you for taking part in that. Before I hand over to our speakers, I wanted to give you a brief introduction to Babel and why we decided to host this panel today. Babel is a specialist technology and telco PR agency. We've long described ourselves as communicators for the digital economy. In our current climate, it's become clear just how digital our economy is. But while there's a huge demand for innovative companies such as fintechs, the speed with which they come to market and the vast sums of money involved leave margin for error, and building trust at speed is a challenge. So as companies battle with building and maintaining trust, as well as coping with the crisis they hit, we wanted to discuss how deep that trust issue is and what organisations can do to tackle it through their communications programmes. Just a few points of note before we begin. We've allocated time for questions at the end. If you do have a question, please write it in the Q&A box, and any audio issues flag in the comment box. And we will be sharing a recording afterwards. We're using the hashtag BabelTalksFintech, so please do use it in any social media posts, and you'll see all the panelists' Twitter handles on the screen on each of the slides. Lastly, if you'd like to speak to Babel about how to create an effective comms programme in a challenging industry, we will share our contact details at the end. Please do get in touch because we'd love to hear from you. So without further ado, let's talk to our panelists. And I'm going to come, first of all, to Connor Coughlin of Vinergo. And I want to ask you, Connor, has fintech always had a trust issue?
Well, I think it's a really pertinent question, and certainly in relation to the poll. I hope our viewers and delegates today would agree that not originally. So I think maybe if I could split this into two, I'll kind of take the foundation approach of how did we get to where we are, and then come to that trust issue. And obviously there's a lot in the trust arena, both with fintech and big tech, right, who are playing in this space. So to those who might be old enough, and I apologize to any millennials who are viewing us, but if you can cast your minds back 5-10 years ago, if you were going to, experience with your local bricks and mortars bank, you were paying excessive fees, right? So you were paying high fees for foreign exchange. If you wanted to send money to a pal around the world, it was a £35 fee in certain cases. If you wanted, you were perhaps paying excessive overdraft fees. Those overdraft fees were very heavily hitting in the UK, the poorest members of society, particularly students and those who were on low income families. So that was an issue societal wise. And then of course on top, particularly with the UK, but also with Europe, we had the LIBOR rigging scandal, we had the PPI scandal, we had the Panama and Paradise Papers. We could go on for a long time, right? So traditional bricks and mortars banks haven't had the cleanest run, let's put it that way. And the customer experience was not always seamless, frictional, and possibly rarely delighting. So that was the kind of foundation or the world we were in. And then came the nirvana of the fintech movement. So some really creative entrepreneurial individuals, very often from the traditional financial services industry, coming together, forming new businesses and saying, hey, we're going to address this pain point. We can do this better. We can do this cheaper, faster, more reliably, more accessible. We can really help society and citizens around the world avoid these excessive charges and bypass these legacy infrastructures and systems and just really have a great customer experience. And the whole world was super pumped and hyped up about this, and this was great. And I'm sure many of your viewers today will be very familiar with the names. So TransferWise, Revolut, even PayPal at its core, this is what it was doing. And on the payment side, Wirecard, which I know Eric will touch on, so I won't steal your thunder there, but we've got Stripe, you've got Chime, you've got so many players in that space of just sending money around the globe. And then of course you have the household names, Monzo, Revolut, Starling Bank, for those who may dial in from the United States, Apple Pay, Google Wallet, Chime and beyond. So all these players came to market, and then they started to face, as they scaled and industrialized, a lot of the problems that the mainstream financial players had. So there's a lot of dark actors out there in relation to financial crime. There's a lot of money laundering issues. There's obviously issues with regards to data privacy. We've had a lot of breaches. So you use a new fintech and your data ends up in the hand of bad parties. It's not a great experience for you. So I think what's happened is in the very start, the fintech didn't really have any trust issues. I think it was very optimistic and positive and driven. And then now, as it's scaled and grown and become more commercial, one could say, and potentially the margins have become an issue, we're seeing a pivot. And we're seeing some dark actions, if you want to put it, by some players. Obviously, there's some amazing fintech players who have been compliant, who've been best in breed, best in class. But in many cases, we've seen issues or learning behaviors, or perhaps even naivety when it comes to stopping criminals, delivering a good customer service, not shutting down or collapsing your platform and allowing people to access their money. So the trust issue has become, the trust failures, if you want to put it, or failings, have become newer. And we're not there at the onset, but are very much there. There absolutely can be overcome, in my opinion. But I think that's where we've gotten to. And that's where fintech, and I'll add big tech, because we've seen a lot of big tech players moving in to financial services. We're all familiar with Apple Card, even Goldman Sachs, Marcus's retail digital bank, right, is kind of in that space now. So I think it's a movement. So I hope that it hasn't been too much information for today's viewers, but I wanted to set the scene of where we were and how we got here and now what's kind of happening.
Thank you. And do you have any other data on what sort of the reality of the level of fraud or kind of bad behavior within the fintech industry is?
Sure. So and I'll divide it into two. So I'll take some household examples. So
Mm.
I think everybody's probably familiar these days with Revolut, and I'm not saying they're preferred over Monzo. That's a whole debate, people can have. People are very passionate about the logos they go with. But in 2018, Revolut were censored by the Financial Conduct Authority for turning off their anti-money laundering software and systems and controls. At the time, the COO said it was effectively a mistake and they underwent an internal review, turning it back on. But basically, they opened the gates and allowed money laundering to run free through the system, which is not great. I'm not going to talk about the big German issue at the moment, which is vast, right? And we have a whole thing around missing COOs in the Philippines and Bitcoin, but that's going to be someone else's conversation point. But in relation to actual fines, so there's something to bear in mind is most fintechs are not regulated. And that means they don't fall under the same banking supervision that you see in different parts or different jurisdictions. That is changing. The Hong Kong Monetary Authority and the Financial Conduct Authority of the United Kingdom are putting into play frameworks to work with fintechs, and there is a movement to regulate them more. But if you want higher level pictures, last year there was $32 billion in sanctions and violation fines levied against the broader ecosystem. There isn't the same granularity when it comes to fintech, because a regulator can't enforce an action against a non-regulated entity unless it's breaching standard rules and regulations to do with funding terrorism and crime. Then yes, you fall under it. So we don't get the same level, but we've certainly seen vast breaches of data, breaches of GDPR, breaches of obviously, well, we could have a debate in relation to the holdings and assets of institutions, and then just actual costs. So we've had Robinhood outages for those who use the platform for trading. We've seen issues with Webull. We've seen issues with Revolut locking people out of their accounts when they're abroad and in emergency situations. We've seen a lot of what you could say is bad customer experience. And we've seen a lot of challenges when it comes to money laundering, sanctions violations, which is a particular interest, obviously, to the US and to Europe. But those issues are at the core. And I just want to reiterate, the mainstream financial services ecosystem is not necessarily any better than the fintech and tech challenge. It's just, I think consumer expectations were that fintech and tech would be superior to the traditional bricks and mortars institutions, and that it hasn't exactly happened.
And do you think that when it comes to consumer, does the reputation of the bank, the payment organization, does that matter to the consumer?
Yeah, and I think this is a really good question. And I think it also comes down to, when we talk about the consumer, is it an entity or is it an individual? I think if most consumers, as in individuals, put their hands on their heart, they'd say initially in using these providers, we weren't so much concerned about their reputation. It was more about cost and the system's access. Speaking very plainly, I signed up to Revolut so I didn't have to pay £35 a pop to send money abroad, right? That was the reality. Did I expect them to be all singing, all dancing? No, but they were quite niche. But now as these entities or fintech firms seek to ask me, for example, to use them as my main banking provider, well, that's a very different story. Do I trust those fintechs with all of my paycheck, with paying out my mortgages, paying out the rest of my bills for my life? Would I make them my primary account provider? And certainly on a personal level, no, I wouldn't. I don't hold them in the same level of trust that I do for certain other entities. And strangely enough, I would hold certain big tech firms in higher respect than certain banking institutions. So, it's debatable on that front. But reputation was not always an issue, but it is now becoming an issue. So if they want to become the primary financial services provider for a customer, then yeah, reputation matters, and it really matters now. And as those entities are seeking to improve margin and grow more rapidly, and they're trying to displace or cross-sell additional services. So we've seen FX transactions, we've seen trading, we've seen insurance. Some of them are trying to offer you life assurance. So you're trying to think, well, how long are you going to be around, right? Life assurance policy is quite a long time. So, I think now, yes, reputation does matter. And I think the sector is at a unique inflection point where they can tackle this. And if they tackle this, truly commit to it and address it now, it will really serve them going forward. But I think reputation does matter now, but not necessarily in the past.
And final question for you, Connor. I mean, we talked there about they need to do something to make the change. What would you pinpoint as the, as the main thing they need to make a change in order to kind of further that trust?
Sure, and I think this comes down to a journey, and it's a journey actually that many firms have been on, certainly since COVID-19 came into our lives, and that's around the digital transformation process. And by that I mean this: a lot of the fintechs and big techs at their very core are IT builders, right? Engineers. They saw a problem, they wanted to fix it, they wanted to streamline it. They're not necessarily regulatory experts. They weren't necessarily coming at this from a regulatory perspective and thinking, okay, there's bad actors in the world. There's very, very in tune and sophisticated criminals around the world who want to wire money illegally, defraud states, let alone entities who want to send monies to the wrong parties for varying reasons. And this is not necessarily the core. So certainly my take would be the fintech and bigger tech movements, if they're genuine, want to expand in the financial services sector, they need to deliver not only award-winning, seamless, frictionless customer experiences, but they also need to deliver regulatory assurity. And I'm not going to plug on our side of the house, but we're client lifecycle management specialists, and we see it every day, and they go hand in hand. It's no good delivering a great digital experience if what you have is a shell, and behind the shell there is no security. There's no data security. You're not actually ring fencing the client's privileged information. You're not making sure that their payment details and personal contact information is secure. And you're not actually stopping criminals from either accessing that data or your systems. So you've got to do both at the same time. You've got to deliver a wonderful value-adding customer experience, but you've also got to be compliant. And that's where I think the subsector is at. We've really got to get to that point now where we're mature, we're sophisticated, we've got all the bells and whistles in place. Yes, we're digital and accessible, but at the same time, we're being stable, we're being determined, we're being compliant, and we're ensuring that we're keeping your personal information almost as if it was gold in Fort Knox, that we're making sure that that's not going to fall into the wrong hands. I think if the industry does that, I think you'll really see this trust issue will fade away. They'll become very proven and valued brands, and I think they'll go on to even greater success than they have today.
Thank you so much, Connor. I'm going to ask the audience another question at this point, which is just to draw on your last point: is regulation, increased regulation, really the key to regaining trust in this industry, do we think? And we'll give them just a moment to have a thought on that. Thank you, everyone. I can see you're keenly answering. Wonderful. So we can see that yes, the feeling there is that it will go some way to help. So it's one of the aspects. It's not the be all and end all, but certainly one of the aspects to getting trust. Thank you so much for answering those questions for us. Let's talk to Eric. Eric, from your point of view, then is there, you cover regulation and fintech, is there a trust issue, and do consumers care?
Yeah, I do definitely believe that there is a trust issue, just like Connor said. And a part of that has definitely to do with the fact that this is a new sector, just like Connor said. Because I don't know about you, but I'm trying to convince my father of what Revolut does is something that just won't happen. And the thing is that most of the fintechs, or like Revolut, Monzo, Chime, they do target millennials or Generation Z. And there was a research done a few months ago by a company called Capco that looked into what the most deciding factor for people using a new service or a new bank is. And hearing what their parents thought is one of the key drivers. So if the parents can trust it or can't understand it, have a trust issue about that, that is definitely an issue. At the same time, the fintech sector, as the name suggests, is part of the bigger tech industry. And as we all know, the tech industry has had a few years now of some really bad press. We have had the Cambridge Analytica scandal, Google having issues with GDPR and competition, and of course then fintech goes into that as well. And just like Connor said, there have been no shortage of poor headline. So like I said, Robinhood has had problems where they have stored their users' passwords on unencrypted data servers. They had issues where they haven't really communicated the risks of using their service, allegedly, which has been thought to have cost people thousands of dollars and had pushed people into committing suicide, according to some reports. And of course, you have Revolut, which has faced major issues with how they allegedly treated their employees. So all these things does create a feeling that, yeah, there is a trust issue. But if customers care, now that is another question.
A question, do you think we're getting enough? You mentioned there are a few different stories that are coming through. Are we getting enough? Are we getting the full story in the media of what's really going on behind closed doors?
Well, we do try. I think both Ruby and I can agree on, we do try to cover it as fairly as we possibly can. But at the same time, we know that at the end of the day, we need to report what's happening in this industry and what people are interested in, and report what people are interested in. The sad part about being a journalist, in whether you're covering fintech or Justin Bieber's new album, not sure if Justin Bieber has done a new album recently, but that just gives you a date of how old I am. We will cover bad press. We will cover when things don't work out as it should be. We will cover it, just because that is what people are interested in. As a case in point, every few years or so, there will be a new newspaper launched that is devoted to communicating the good news. They know the people interest stories that make people put a smile on people's faces. The problem is that these magazines, newspapers, without fail, they will fail within a few years. So people aren't really that interested about hearing all the good stories. They're more interested in about hearing the bad press. That being said, now I have spent the last few minutes talking about how bad, how much we love to report about when things go bad. We do try to also report about when things go right, but it has to be something that is really exciting. So Revolut supporting the LGBT community, or reaching out to support charities, or helping people with food, helping people be able to afford food in food banks, or covering people during the COVID crisis, or Tom Bloomfield deciding not to take any salary for 1 year in the hope that it will help some people at Monzo keep their jobs. We will report about that as well, but kind of have to be something extraordinary.
Mm-hmm. Thank you. And so what advice would you bring to a business who is dealing with an issue that they probably don't want you to talk about, but you're going to have to? What's your advice to them on the best way to kind of communicate with you?
I know that happens, and from my perspective, the best thing they could probably do is, even though they don't want to talk about this issue, I think that ship has already sailed once someone starts reporting about it. So the best thing they can do is to be transparent, to speak with people like myself or Ruby when something happens. I also recognize that, like when Revolut filed that they had triple their losses in 1 year, I can understand that the CEO may not want to sit down on a one-on-one interview with myself and talk about it. But maybe a spokesperson should probably release a statement or release something just so we have something. And in the worst case scenario, if you don't have a statement, if you don't want to give a one-on-one interview with some executive, it is okay to say no comment. Thank you for the opportunity, but no comment. Because what that does is that it keeps the communication open. So maybe in a few months' time, when something interesting does happen, you'll be more able and ready to report on that and have a communication about that story.
Thank you. That's really interesting to hear from you directly. I think it's something we certainly discussed with our clients a lot when any level of issue comes through is, do we respond and how? And I think I agree with you. Transparency is really critical, and it's about saying the right thing at the right point. but equally very good to hear about, you know, the ability to say no comment and how that transpires to you, as opposed to being seen perhaps as a sort of, you know, a stopgap or guilt. If I can take the conversation to Katerina, I want to really jump off on that point and ask, do you think fintech does enough to put transparency at the centre?
Right, Susie, thanks for the question. I think in order to answer the question, we need to take a step back, as Connor said, and start from the financial crisis of 2008. So in a moment where trust was at the lowest possible, like towards the financial industry, fintech unicorns were smart enough to understand the chasm and position themselves as disruptors, the no hidden fees digital banks, let's say. And by doing so, they smartly closed the gap between the consumer and the institution at a very crucial time. Among many of the marketing activities that Monzo, Revolut, and you know, all the other fintech unicorns that they have done, I think it's worth probably remembering, like for example, one which so Monzo and Revolut changed and rewrite the terms and conditions into plain English to be closer to the and more transparent and approachable to the customers. So is this an attempt to be a purple cow, as Seth Godin will call them? It might be, but at the same time is bringing value to the user. So despite this being just a marketing strategy, it does add value for the user, and it makes financial services more approachable than they've ever been. So it's also true that brand reputation, though, and trust is not only impacted by the communication transparency of the day-to-day interaction with the customer, but also by the service you provide. For example, we know that negative credit bureaus, the bureaus that store just negative data on people or businesses around the world, they tend to have a bad reputation despite being transparent in their mandate. So nowadays, thanks to the widespread use of smartphones and the use of social media as a medium, I'll say the daily communication with the consumer has become more circular and conversational, and it's therefore harder for brands to hide away from inquiries from the customers. So lastly, to answer your question, Susie, I believe fintech is doing better than traditional banking in making an effort to be transparent, and or better, is leading the way. Is there room for improvement? There certainly is, and there is still chance to raise the standards on this measure for fintech and for financial industry in general.
Thank you. And to move on from that, I guess the question, do you think customers really care about the corporate reputation of these companies? Do they care about, you know, when a company's being told it's, you know, not a great place to work and that side of business? Does that impact them, do you think?
Well, I'll say yes and no. Yes, if a company is trending on Twitter for the wrong reasons, there'll be a concern from the consumer. No, also because if a company is providing financial needs that satisfy the consumer's needs, they will be less concerned about the reputation due to the loyalty to the brand, I'll say. We have in recent years seen movements like the Me Too, the Black Lives Matter movement, asking companies to take actions and ensure more inclusive and safe workplace. So I'll say consumers are becoming more ethically aware of which company they choose to work with. And there is nowadays more choice than 5 years ago. So it's easier for people to switch from one service provider to another. And there is more volatility in that sense. But we, and of course, we have recently heard a lot about the toxic environment in, you know, fintech industry. But I'll say, for example, the big four of consulting, they get pointed at all the time. And but we know on one hand that it's a very competitive environment and people want to work there. So on one hand, you have the brands who need to protect this reputation. And on the other hand, you have a very competitive environment where ambitious people strive to work. So it's true that nowadays people do keep you accountable as a brand for what employees are saying. So with the rise of social media, of course, like as a medium of communication, brand accountability has become a real thing. And anyone with internet access can escalate an issue to social media and provoke a PR crisis. But ultimately, I'll say they will be more likely closing an eye if the company in question is providing a good service for them.
Thank you. And do you think, we talked a bit about regulation and some incoming regulations, do you think more voluntary regulation in the meantime will help?
Well, I guess it would definitely help. I mean, I guess big brands need to raise the standards of practice, not just because of regulation, but just because they're being watched closely from the customers, as you were saying. I don't know, I can give you an example of Credit Info itself, where we had Credit Info Georgia, where we started a bureau in a very unregulated environment, and we self-imposed like UK standards of data management and security. So yes, both regulators and consumers are keeping an eye on you, whatever you do. So as a brand, it's always advisable to take a step ahead and be ahead of the trend, let's say, because sooner or later the regulator will come and ask you questions.
Thank you. And so going back to that question about customers, if fintechs put customers at the heart and they keep them at the heart of the products they're developing, can they build trust or rebuild trust that way?
Absolutely. A customer service approach, a customer-centric approach is the key, and I guess trust will be earned by providing a service which is relevant to the customers. It used to be the product management was more decided by the internal stakeholders rather than the user itself. But you know, by being already user-centered, a company is committing to giving importance to the right causes. And you know, nowadays with the amount of data that we generate daily, brands do have all the tools they need to know what their customer care about. So yes, it can obtain the level of trust they need by putting the user at the center.
Great. And final question for you, Katerina. How do you kind of personally with Credit Info go about making sure that trust is built in to your strategy?
Right. So Credit Info is a very widespread group, and by its nature is a very multicultural workplace. Because we go from countries like Iceland to the Ivory Coast or Guyana, so a very different culture, very different cultures and geographies and backgrounds. So following the latest anti-racist movement, voicing the rights around the world, as a company, we had to interrogate ourselves if being such a diverse and varied company made us inclusive by default. And as we asked ourselves this question, we soon realized that it was clearly not, there's no direct correlation, let's say, but in order to be really inclusive, for example, we had to ensure that each person within our group was feeling represented and entitled to have a chair at the table where decisions were made. So I guess the key to be trustworthy at the eyes of the customer is to keep ourselves accountable before our clients do so. Encourage conversations or across geographies, roles, seniority levels, and be corporates with a startup mindset, let's say. Yes, as Eric was saying, you know, nowadays it's hard to hide away from a PR crisis. Before you had like 9 to 5, you could go back and draft the press release and try to understand what was happening. But right now everything is live, so yeah, there's nowhere to hide.
Nowhere to hide. Thank you, Katerina. I'm going to ask the audience to join us again in answering a question. And And just get a view on, you know, do customers only care about the product? And if that's good enough, then so is the company. An interesting point. I think this is great. For me, I can see all the answers rolling in, but I appreciate you guys are just waiting on me. Give it a couple more seconds. Wonderful, thank you very much. I will share those results. So I think that's pretty interesting that so if it's relatively few who think that, yeah, customers just want the great products, and actually ethics and reputation matter. It may be that it matters depending on what that particular issue is, but it certainly is going to have an impact on the way people view a business. So thank you for participating in that one. I'd like to take the conversation to Ruby. From your point of view, Ruby, as a reporter for Fintech Futures, when does an issue that a business is going through become interesting enough from your point of view that it becomes an incident or a crisis?
Well, yeah, that's a good question, and we've touched on it a little bit with Wirecard, but I think it's interesting to use Wirecard as an example here, because there was such a knock-on effect, right? So it started off Wirecard, there was as a huge incident, but then it was the knock-off effect it had on fintechs, especially in the UK, when the FCA barred Wirecard card solutions from operating for days, which obviously then had a knock-on effect on fintechs and did create this sense of crisis, because consumers and businesses who had sort of accounts with the likes of Curve or Anna Money just couldn't access their accounts, they couldn't access funds. But I think it's interesting to look at here how the crisis evolved, and that there was very much this kind of middleman, and that the kind of average consumer perhaps isn't really aware of that middleman, and they're just aware of the end kind of result, which is through that particular fintech company. So it's interesting to look at the kind of chain at which a story happens and where the blame can kind of be put. And whereas I guess on a business side, we understood everything that was going on with Wirecard, and we understood that the kind of blame sat there, and perhaps also with how the FCA dealt with it. But to consumers, it was a crisis because, well, they couldn't get their money, and they didn't care who was doing what process behind the scenes or what cogs were turning. They just wanted to be able to use their services continually. And I think that it's also interesting to look at the fact that I think there is this kind of margin when it comes to downtime, and perhaps you know, because incumbents have struggled, like with all their sort of migrations and shifting different technologies, a lot of incumbents have kind of suffered downtime. And so there is this kind of margin for expectation that there will be a bit of downtime. But I think if fintechs get to the point where they are almost being conflated with the incumbents in terms of the, you know, downtime that they have, then that's a crisis in itself, right? Because fintech has been trying to strive to be defined completely against that and being this slick digital experience. And as soon as they get conflated with these incumbents who were struggling, then that's a huge crisis. So I think that's an interesting thing to note. And also we also touched on Robinhood. And some of the things that have been happening with Robinhood recently, and I think it's interesting to look at their the outages that they had in March, because whilst Robinhood is doing really well, you know, they're raising loads of money, their trade is booming. I also think that it will be interesting to see how the outages play out, because now the 3 class action lawsuits, they've now been merged into one based out of California, and potentially if there is a precedent set, if some of these customers do get any compensation, it would be really interesting to look at if that does set a kind of tone for how fintechs deal with downtime and kind of how they've, you know, dealt with the trust issue with their customers. Will it see more fintechs take technology in-house? And then will that affect the B2B fintech ecosystem at all? It'll be really interesting to see how that plays out. So I think that on that side, it's hard to draw a conclusion until that plays out. But yeah, I guess those are some of my thoughts on that question.
Thank you, that's great. And kind of taking it almost a step back to where we were just before, and thinking of the poll that we just put to the attendees, from your point of view, you know, you seeing that customer loyalty is being affected by the company reputation, or is it about product first?
I think it's a really hard one to answer, and I guess I'm a young fintech user. I'm 24, and I do care about the way companies treat people. And you know, if you look at sort of movements against the fashion industry, for example, or you know, you look at the anti-Klarna campaigns. Klarna kind of bridges that gap as well between sort of retail and the fintech industry. You can see that people my age and younger do care about cheap labour, and they care about companies that might perhaps be taking advantage of young people who don't understand debt enough to take on these kind of easy go loans. I think it feeds into perhaps partly into kind of this idea of cancel culture, which I think is definitely being bred in other sectors and other kind of walks of life. And I definitely think that that will become more of an issue around companies, depending on how they treat their employees and what their policies they have around things like sustainability. And I know for one, as a young consumer, that I resist fast fashion and I consciously buy sort of sustainable clothes. And then if you look at the fintech industry, there's a massive push into the sustainability market now to try and I guess sort of galvanize more young people to use their services. So I think that that's a really big theme, not just in sort of the retail industry, but in fintech too. And I think there's also a reach issue as well. I think that, you know, every time someone asks me at a party, oh, what do you do? And I say, oh, I'm a fintech reporter. They're like, what's fintech? And so, you know, no one kind of knows what it is still of my generation or my age. So I think, and I don't mind that, but I think it raises an important point that fintech, whilst there are some consumer fintechs and people probably don't think of them as fintechs, they just think of them as what the service is. A lot of fintech is behind the scenes and it's supposed to work, but sort of not be seen and make things easier for everyone. So I think that fintech is still a relatively new concept in mainstream news. And so it's a problem of coverage as well. So whilst, you know, people care a lot more about a sector like fast fashion because I guess it's covered a lot more in the mainstream media, I guess perhaps, you know, stories about, say, toxic work culture at a specific fintech or things like that are still not perhaps widely known enough for young people to care enough to stop using the services. So I guess our job, mine and Eric's and every other reporter out there in this sector, to get the word out and to kind of paint as fair a picture as we can with as much noise as we can. But, you know, it comes down to when I talk to my friends, and, you know, I talked to them a little bit about, say, for example, what's been happening with Monzo lately. Their valuation went down, and then kind of discussion around their financial results and some of the key pointers out of that. And they had no idea about that. And they found it really interesting and actually made them think twice about how much money they kept with Monzo. And, you know, like, because some of them have put all their deposits with them, which is obviously quite rare. Like, they're still struggling to get people to put all their money with them. But yeah, so I think it does spark things in consumers, but I think it's the reach issue as well, and kind of bridging the gap between mainstream news and sort of the more business news sector.
Thank you. And I suppose that this question is sort of feeds into that slightly with the reach issue. You know, if people have learned about the issues and these organisations have lost loyalty, can they win it back, do you think?
I mean, it depends how bad it is, right? And it depends who's impacted. So is it the employees of a company that is impacted by the bad news? Is it the users that have been impacted by the bad news? I think ultimately companies need to be more transparent no matter who's impacted. I mean, if you look at the Robinhood three-pronged outage saga that I mentioned before, it has prompted quite a few people to sort of be a part of this class action lawsuit. I spoke to one of the lawyers based in Florida who's now working on the case, and he said, you know, hundreds of people were ringing his office. So, you know, like, it really depends on how then the company sort of deals with it, because in Robinhood's case, they sent an email around saying to all the users, well, if you sign this email, or if you sign this document, then we'll give you a little bit of compensation, but you won't be able to sue us. And so that's obviously not very transparent. That's quite sort of shady way to go about things. And I don't think that served them well. And I think it just sort of angered more users and probably upped the numbers of people that went to lawyers about it. So I think that's a good example of how perhaps not to handle something. But then I think they've handled other situations a lot better since then. So I think fintechs are constantly learning, which is always nice to see. And I think, again, if you look at, say, the N26 sort of news that came out quite very recently, Finance Forward did a great job reporting on that. And, you know, the founders did come across badly. They tried to boycott their own employees, you know, from trying to seek fair representation. So rather than sort of make good of what sort of perhaps went wrong, they sort of fulfilled the prophecy that their employees had said, which was that, you know, management was at an all-time low. And so, I don't know, I think that, and if you look at it, most N26 employees bank with the challenger. So there's no doubt that they'll lose perhaps some of those because they had a data leak last year, which exposed a lot of employees' salaries. You know, but it's hard to say what the lasting effect that this would have on perhaps, you know, whilst they've definitely probably lost the loyalty of a lot of their employees, it's looking at sort of users. You know, I know that there's quite a big belief in Germany, or well, in Berlin specifically. I know from friends I got reporting there that, you know, people are aware of what N26 is doing and yet still using them. So whilst, you know, perhaps internal sort of strife isn't enough to kind of sort of sway that loyalty. And last of all, just, you know, startups which create forums and community around their investors. I think it's important to highlight, because obviously if you're creating a community where your users are literally invested in everything you do, then you have to sort of keep that transparency more than ever, because if you don't, then you'll really alienate not only your users but the people who are funding you. So I think that again, and I've seen that, you know, before, where that's gone wrong, and the way that certain companies handle their forums and the way that management sometimes speak down to users and investors, which is not nice, and it's very alienating. So yeah, I guess that those are some of my thoughts on that question.
Wonderful. And a final question for you, Ruby, kind of similar to that I asked Eric. From the media perspective, do you think organisations can turn the tide of the media coverage, or do we love the negative headlines too much?
Well, I found this question sort of funny, because this idea of kind of do we love having someone to hate? I actually think that fintech as an industry, like if you look at the business side of it, rather than looking at how consumers receive news, it's people don't like negative reporting in fintech. Like, you know, if we're reporting on things that, you know, are not great for a company that perhaps has had really high growth and people have kind of loved and is considered as a sort of fintech darling, then there's sometimes quite a lot of hate for that reporting, even if it is accurate and it's true. So I don't know. I think that there is this kind of protective feeling in fintech of like trying to protect companies that are doing relatively well, perhaps have an odd slip up along the way, which is, you know, totally normal and natural. But yeah, I think it's our job as reporters to obviously, you know, we can't sugarcoat things. And, you know, like Eric was saying earlier, we have to kind of report on things, even if they're bad, and it doesn't make us feel great, but we have to do it. So, and it's important because it's a fair representation of what's going on in the world, you know, and so I think that Monzo is a really good example of that. And sorry to use Monzo again as an example. I do think they're a great company. But it's a good to look at what happened around their sort of financial results, and when people pointed out that they were sort of said something in kind of small print in their financial results about not being able to perhaps continue operations due to things around COVID, that you know, obviously it's our job to pick out things like that and to highlight it, because there's a reason why they're telling their shareholders that, and so that's our job to kind of pull it out. And I think that, you know, it's interesting as well, whilst companies do need to be aware and try and I guess be aware of the opinion that is of them in the press. If you look at Wirecard, for example, and how much that's dominated the press, it's become almost like a news vacuum, right? Like, I think it's kind of calmed down a little bit now, but for a while it felt like I was just, you know, writing about Wirecard every other day or every day. I'm sure a lot of journalists, including Eric, felt like that. And so, yeah, I think that that's interesting to look at how sort of bigger things, macro stories around companies can sometimes also drown out some of that worse press as well. Whilst it did kind of have a knock-on effect to trust with UK fintechs for a small amount of time, it did also kind of serve as a favour in a way, because anything that would have happened when in the thick of the Wirecard drama would have probably got pushed to the bottom of the list. Because it was, you know, all consuming.
That's great, thank you very much. I think it's, you know, it's really interesting to hear all those points of view, and I think the real challenge for comms professionals in this industry is how to create a very genuine voice and have a clear policy of transparency that through the highs and the lows that you really follow through on. And I think that's just why it's so important, you know, for all of us to have that kind of very clear tone of voice guidelines and clear messaging that enables you to deal with, you know, the day-to-day running of the business, but also the issues, and also that follows through clearly into any kind of crisis comms strategy that you need to have in place. I've got one last question for our audience before I let them loose on asking us some questions. So final question, in your opinion, attendees, is the trust issue exacerbated by the news agenda? Eric's giving me a look there. A couple more seconds. Wonderful. Thank you, everyone. If anyone's got any additional questions and answers they'd like to drop into the Q&A box, we'll go and address those, and I can invite the panel to answer those for us. Thank you for your votes. This is an interesting one. Is the trust issue exacerbated by the news agenda? Largely yes, and at times. So I think interesting points of view there. Thank you very much. So if I can move on to question and answers. Let's start. We had a question in from Andrew, which I think was sort of directed at Eric at this point, but is there much variation in trust levels for fintech services by population age?
Yes, but it also kind of just what Ruby covered when she was talking about younger people tend to. Okay, let me just collect my thoughts. So like the young people tend to be more eager to use these solutions. They tend to be more eager to go on the smartphone and do the banking there. So they, just by being how old they are, they tend to be more there. And like I just mentioned earlier, my parents and people of that age tend not to be as adept at, I mean, not even using Facebook, let alone doing banking online, could become an issue. For my father, it's a whole day event when he has to do his monthly banking. But at the same time, just like Ruby said, younger people will also care more. So even though we're reducing it more, we will care. We will care how they're treating their employees. We will care how the impact we're having on the environment, and it's then up to the fintech how they respond to that young person's care. Thank you.
Jenny asks, how do we make regulation happen at scale across different subsectors of fintech? Would Connor or Katerina like to answer?
Maybe Katerina, I'll go first, and then I'll hand over to you. I should actually direct you to a blog I wrote on this topic because it's quite in depth. But I mean, fundamentally, there's a question there, which is, should it be regulated? In my opinion, certain elements that are becoming systemically important is yes. So if you're going to be a core payments provider or the key infrastructure, as Eric and Ruby have discussed with Wirecard, then I think those kind of entities should be regulated because they're foundational, and there's so many other companies running off their systems that they're not just an independent standalone firm. They've become integral. But we could have a whole conversation, which is this. In the crux of financial services, many parties have discussed for years the attempt to globalize regulation or to mutualize it between all, I'm going to use very technical terms, competent authorities around the world, to see if they could harmonize the regulatory requirements so that you had a supranational standard. Now you can tell I'm a geek and I've been in this space for too long, but what I would say to you is, I think the approach that I'm seeing at play today is a better approach, which is the localized sandbox approach from individual regulators working with their own unique local ecosystem to try and ensure that the foundation locally is set correctly. I think if every competent authority did that, then we would have a situation where you could then look at future harmonization. And I think one trading block, obviously, I think the European Union is very well positioned to be able to do this, much better than I would say in North America. And there really isn't a similar comparative in Asia Pac. It is effectively 7 to 12 large economies. So I think the best approach is going to be regulator, competent authority, local basis, ideally trading block, and then from there upwards. However, as I said, it depends on the nature of the entity, their scale, their importance, and what it means. And I think a way around this is also what we're seeing in the market is mainstream financial institutions collaborating and partnering with fintechs, where the bank is the face to the market and the fintech can be the engine, but it is the bank that has the banking license and the compliance and the regulation, and the fintech is the powerhouse. I think those kind of solutions are probably the way forward.
Lovely, that's great. Thank you. Katerina, was there anything you wanted to add to that?
Yes, no, I totally agree with what Connor just said, and I guess the way forward is close collaboration between the regulators, central banks, financial services, and fintech. They should have been working in silos, but like they are part of an ecosystem. So I guess that should be the way forward.
Thank you. A question for Eric and Ruby. I'm interested to see if you answer this one. Without naming names, are there any significant fintech companies you are currently suspicious of in terms of their regulatory compliance or potential for fraudulent activity?
Go and
Am I going to get a no comment?
Name some names.
Ruby, I think you could start off.
Yeah, sure, I'll start off. Well, I was actually approached recently about a company, which obviously won't name, who, yeah, has been sort of, someone's noted that they have been sort of storing funds fraudulently. And yeah, I'm looking into it at the moment. But it does sort of seem to be slightly niche, but it could have quite big repercussions. So yeah, that's all I'll say. But yeah, I think that there are companies out there who are sort of, whether they know or not, I think most of the time they will. But then it's just how they deal with it afterwards and who they pass the buck on to. But yeah, I think that there will be obviously way more that are doing things perhaps. But I think generally, obviously, fintechs don't want to be doing things that are illegal if they can help it. So yeah, but I can't say much more, I guess, without.
We look forward to that article.
Definitely do. Please do share it when you're ready. I think a cheeky answer to that question is we distrust everyone, because something what the Wirecard scandal showed is that everybody can do something bad. But again, without naming anyone else, I think the big risk is when you have a startup that is scaling considerably faster than expected. It's something that's scaling really fast. And again, it's not because they, like Ruby said, it's not because they want to do something bad, but it's just faster you scale, the easier it gets that some things may not be as thoroughly done as it should be. It's also worth remembering that it's not just the thing that you associate with fintech, like the frauds and money laundering or no KYC. But it's also simpler things like just how they treat their employees, conforming to HR regulations. Again, all these things become more problematic if they scale really fast. Again, not saying that everybody misbehaves. That's not what I'm saying. I'm saying that the risk is probably bigger, and it's those companies that I will look into.
Thank you. I'm just conscious of the time, so I'm going to look at two more questions that we've got. From Matt, the traditional banks created an opportunity by providing a poor customer experience at a high price. Fintechs / neobanks address the price issue, but the poor customer experience and lack of governance has created a trust issue. Do you think this creates an opportunity for someone else to step in and take business from both? Who could do this? Big tech, smaller providers like building societies, or someone else completely different? I'm gonna, any volunteers for answering?
Well, I'll chime in on this. So the conservative estimation of loss of revenue due to bad CX with traditional banks is $10 billion per annum. I think you should probably add an extra zero to the end of that because it was answered by the bankers themselves. So we know that the revenue loss is vast. Do I think that more parties should come into the mix? I'm not entirely sure there. I think what's needed is better collaboration. I think we've got a lot of fintechs at the moment, a lot of reg techs, wealth techs, insure techs, we could go on, right? And we've a lot of consolidation happening within mainstream banking. And then we've got the entrance of the big tech providers. I think we've enough players today to sort this out. But I think what's needed is transparency, openness, trust, and true collaboration between the players. And hopefully, from a European perspective, you know, open banking, open API, these will actually start to deliver something, and that we'll see something around PS2 as well about payment services. So there's a lot of great goodwill and a lot of frameworks, and I think we just need to get on with it. And I think if we take Eric and Ruby's thoughts, you know, be upfront, be honest, be open. The more open you can be, the better. Within reason, obviously there are commerciality issues, but you know, do what you need to do. But I think at the core, you should start with your customer and work outwards. If you're starting with a profit line or a tech system and working inwards, that's where the mistakes seem to happen.
Wonderful, thank you. I'm going to draw us to a close because I'm just conscious that we're running over time. I want to thank everybody for joining us today and participating. Thank you in particular to all of our panelists. I think it was a really interesting discussion. Hopefully everybody was able to get a lot from it. We are going to be publishing a white paper based on the discussion, and we look forward to sharing it with all of you. If you want to get in touch to discuss anything at all further, please do so. And thank you once again for joining us today.
Thank you for having us.
I think it was a pleasure.
Thank you. See you guys.
Thank you.